This series of videos aims to answer the question, why retail investors often lose money. In the last video, we talked about net profit, the first key logic of the stock rise. And in this video, we continue to talk about the second key logic of the stock rise, expectation. Still the same formula. In the second key logic, there are two key words here, present and future. In the stock market, the future is more important than the now. In fact, this is what analysts called expectations. PE from another aspect is actually the market's expectation of the stock value. If the expectation of the stock increases, the stock price will naturally increase. You can also interpret the expectation of PE as how much confidence the market giving to the company, or it can be considered as a current market capital's favor to the company. Favor is very valuable in the stock market. For example, two companies that both earn 100 crore can be treated very differently in the market. Let me give a more extreme practical example. The market value of the new energy vehicle Rukinio in the US stock market was once pushed up to $90 billion. At that time, the world-renowned car maker Mercedes-Benz was only 100 billion. However, NIO is still losing money steadily, and the latter's annual net profit can be $4 billion to $7 billion. The reason behind it is that the market believes NIO can make a lot of money in the future, and its development prospects are very good. So the market is willing to give it much higher premium than the market average, that is, a very high PE value. However, since PE stands for expectations, the company must have the ability to meet market's expectations in the future. Which means that the company does have the ability to make itself stronger as expected in the future. Conversely, there are some stocks with poor fundamentals. For some reason, the stock prices under the manipulation of institutions will also show a rocket high rise. However, the inflated valuations of these stocks will eventually return to the reasonable valuation and range. Meanwhile, the stock price also plummeted as the PE fell. In next video, we will discuss the last two related concepts, how retail investors lose their principal and what is the most dangerous situation for a stock.